Welcome to the official video overview of the initial public offering of Mann Fleet Partners Limited. This video is directed at and intended for distribution to and use by residents of India only. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead manager and the company that you are the intended recipient of this video and that you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view it, please exit now. Investors are advised not to rely on any other document, content or information provided in respect to the public issue on the internet, online websites, social media platforms, microblogging platforms or by influencers. Investors should rely only on the information contained in the offer document and the price band advertisement for making investment decisions. Investors are advised to read the draft red herring prospectus DRHP dated 29th of September 2025. Mann Fleet Partners Limited, originally incorporated as Mann Tourist Transport Service Private Limited in 1992. New Delhi headquartered, Mann Fleet Partners is one of India's leading integrated fleet management and mobility service providers. In the year 2024, it transitioned into a public limited company, and in the year 2025 under the name Mann Fleet Partners Limited, marking a new chapter of growth and market leadership. Mann Fleet Partners Limited has consistently adapted to India's evolving transport and mobility needs. The company is promoted by industry veterans Amritpal Singh Mann, Paramjit Mann, and Robin Singh Mann.
Over the last few years, the company has evolved from a regional transport operator into a diversified mobility partner with a nationwide presence. Today,
Mann Fleet Part
is managed by an experienced board, combining the commitment of its promoters with the oversight of independent directors.
From corporate employee transportation, airport and hotel transfers, tourist luxury coaches, to long-term lease services, Mann Fleet Partners has established itself as a trusted partner for leading corporates, institutions, and individual customers. The company offers a comprehensive suite of passenger mobility and fleet services. Backed by decades of operational expertise, strict compliance, and customer-first values, the company has created a strong foundation in the luxury fleet and mobility industry. Mann Fleet Partners has been honored with several prestigious awards. The second prize in the National Tourism Award for the years 2016 to 17, 2017 to 2018, and 2018 to 2019 in the Tourist Transport Operators Category 2 segment presented by the Ministry of Tourism, Government of India. The company was also awarded as the Leaders of Road Transport Commercial Passenger Vehicle in the Leaders of Road Transport Awards 2022 presented by TV9. Mann Fleet Partners has a diverse clientele base including Fortune 500 companies, government agencies and international delegations. The company's commitment to excellence has fostered long-term relationships with clients across various sectors.
Over the last 3 years, Mann Fleet Partners has delivered strong revenue growth, recording a CAGR of 29.6%. From 5,671.71 lakhs in financial year 23, revenue surged to 13,310.16 lakhs in financial year 24, before stabilizing at 9,527.05 lakhs in financial year 25. Our operating profit before depreciation, interest, and taxes has shown significant improvement. OPBDIT rose from 1,868.78 lakhs in financial year 23 to 7,184.43 lakhs in financial year 24 and stood at 4,767.50 lakhs in financial year 25.
Profit after tax has grown steadily with a CAGR of 45.53% between financial year 23 to financial year 25. From 880.09 lakhs in financial year 23, PAT rose sharply to 4,465.08 lakhs in financial year 24 and closed at 1,864 lakhs in financial year 25. Mann Fleet Partners has consistently maintained healthy margins and returns. EBITDA margins improved in financial year 24 and financial year 25, while PAT margins peaked in FY24. Return on equity and return on capital employed remain strong alongside a steadily declining debt to equity ratio.
The company derives a significant portion of its revenue from certain key customers, and it does not have long-term contracts with all of them. Any reduction in business from such customers or termination of arrangements may adversely affect its business, cash flow, financial condition, and results of operations. The company has long-standing relationships with several of its customers who contribute significantly to its revenue from operations.
Termination or non-renewal of contracts by one or more such customers may materially and adversely affect its business, financial condition, and results of operations. One of the company's debtors owes them a significant amount of 88.50 lakh rupees plus interest towards unpaid dues. The debtor is currently admitted for Corporate Insolvency Resolution Process (CIRP) under the provisions of the Insolvency and Bankruptcy Code 2016. The company has not created any specific provision for doubtful debts against these trade receivables in its financial statements. However, the company has made the following provisions and has experienced the following bad debt in past.
The company's operations are concentrated in key Tier 1 cities across India, and any disruption in these markets
could materially affect its business, financial condition, and results of operations. The company has a pan-India presence, operating in over 80 cities in India through a mix of company-owned and vendor-operated vehicles.
However, a significant portion of its revenue from operations is derived from major Tier 1 cities,
such as Delhi, Mumbai, Ahmedabad, Chennai, Noida, and Gurugram. The increase in prices of new vehicles and fleet-related costs may adversely impact its business, financial condition, and results of operations. The company operates on an asset-heavy model where it aims to maintain a higher proportion of owned vehicles in its fleet as compared to vendor-supplied vehicles. As with any investment, potential risks must be considered. These include dependence on corporate and tourism demand cycles, regulatory changes, etc. Investors are advised to carefully review the detailed risk factors section in the DRHP before making any investment decisions.
The company is exposed to the risk of delays
or non-payment by customers, which may also result in cash flow mismatches. The company is exposed to customer credit risk in the usual course of its business dealings with its customers, who may delay or fail to make payments or perform their other contractual obligations. The company typically grants a credit period of 30 days to its customers and also in some fixed agreements with few customers. It varies from 45 to 100 days.
The company is unable to trace bank statements for certain allotments made by the company. In the event the company is found not to be in compliance with any applicable regulations in relation to such allotments, it may be subject to regulatory actions or penalties for any such possible non-compliance, and its business, financial condition, and reputation may be adversely affected. The promoters have provided personal guarantee for borrowings obtained by the company. Any failure or default by the company to repay such loan could trigger repayment obligations on the promoters, which may impact their ability to effectively service their obligations and thereby adversely impact its business and operations.
Net proceeds from the fresh issue will primarily be utilized for funding working capital requirements, prepayment and repayment, full or in part, of certain outstanding borrowings, and for general corporate purposes. This will provide Mann Fleet Partners with the financial flexibility to strengthen operations, expand service offerings, and accelerate future growth. The initial public offering comprises up to 80,10,000 equity shares of face value 10 rupees each. This includes a fresh issue of up to 64,10,000 shares and an offer for sale of up to 16 lakh shares by promoters selling shareholders Amrit Pal Singh Mann and Palmjeet Mann. The shares will be listed on NSE and BSE with allocation structured as per SEBI ICDR regulations. Not more than 50% for qualified institutional buyers, at least 15% for non-institutional investors, and at least 35% for retail investors. In summary, Mann Fleet Partners Limited represents a strong player in India's organized mobility services sector, backed by decades of expertise and clear growth strategies. For further information, Please refer to the draft red herring prospectus dated September 29th, 2025, available on the SEBI, NSE, PSE, Book Running Lead Manager, and company websites. Potential investors are advised to rely solely on the red herring prospectus, RHP, which will be filed with the Registrar of Companies for making any investment decisions. Please do not rely on any other document or information. Investing in equity and equity-related securities involves risk. An investor should not invest funds unless they can afford the potential loss of their entire investment. This video is for information purposes only and does not constitute an invitation or offer to acquire, purchase, or subscribe to the company's equity shares. Investors should wait for the red herring prospectus to be filed in relation to the offer before making any investment decisions. Thank you for your time and interest in Mann Fleet Partners Limited.